Today we'll talk about 5-minute scalping strategy with a good risk-reward ratio. Hello traders, welcome to my channel. My name is Liam from Stay Green. Even if you're completely a new beginner, but at some point I heard you ever heard about the term scalping. Basically it's get in and get out of market really quick with a small profit. But this trading style requires you to have a certain amount of time in the day to stick to the chart, monitor and execute the order. And if you don't have like few hours per day for this trading style, then it probably is not really fit you. If you like the system that I introduced in my channel, please like and subscribe the channel and hit the bell button. Well, there's a couple of things that please keep in mind before you start trading using scalping strategy. Scalping can easily turn into gambling. Aggressive traders with a little bit of luck win several trades. He can easily turn into gambling. The executing position is purely based on his feeling with the market. That's a very dangerous habit for this market. So try to improve your discipline and try to follow all the rules and system. Second, scalping is one of the strategies that often come with a bad risk-reward ratio. The many traders ready to sacrifice like 100 pips just for 1 or 2 pips in profit. And with just 1 or 2 bad trade that hit stop loss, you may lose 1 day, 2 days, or the whole week that you collect the profit. Another point when you do scalping is try to lower your loss size. Smaller loss size help you to reduce the loss. You should not have thinking, oh damn, if I lower my lot, then the profit will be smaller. Think about the loss as well. Another plus point from trading with a lower lot is you psychologically will feel less stressed when you're trading with smaller lot, and that will benefit you from being more confident. And from being confident, you stick to the rule and you'll be more disciplined time after time. Yeah, so all I want to say is practicing. Do not risk too much and be disciplined. Stick with the rule. That's a crucial thing to keep in mind when you do scalping. Okay, now let's jump to the entrance. When and where to enter the market. Now with this strategy, we will rely on exponential moving average. As you know, single moving average help us to see the general direction of the market. However, a lot of traders typically use more than 2 or 3 EMAs. In this system, we're going to use 3 EMAs, and that will allow us to estimate the trend intensity of the market. So here we have 5-minute chart of the Euro USD. As you can see, the chart is very simple, very basic with green candle in the black background. There's no such complicated indicator that is needed. So for this system, you can use on any Android or any iOS system because the moving average already included, and the setup for the indicator is very simple. So on the chart, you can see 3 moving average, the 8, 13, and 21 period average. The 8 period EMA give me the short-term trend. The 13 and 21 period EMAs give me the medium and longer term trends. Of course, this is my preference. I prefer to use short-term EMAs to try to eliminate the lagging and delay of the indicator for such short time frame. Any number of period combination can be used depending on the type of setup you are looking for and the time frame you are trading. So feel free to use other moving average. You don't have to use the exact setup. Looking back to the chart, notice how price pushed about the 3 EMA in this period. The price staying above the 8 period EMA the entire time. The fact that all 3 EMA were trending higher at around like 45-degree angles during the advance were very bullish. This is the image we'll be looking for on our chart to find a chance to enter the market. All 3 moving average in agreement, in line, and almost parallel with strong trend consensus. Right here you can see the price actually broke below the 8 and 13 EMA, but not yet reached the 21. So this area signaled the bullish in a rush, or some may call this pullback. It broke below the 8 and 13 EMA before resuming the trend. At that point, it confirmed the direction of the market. So after we identify the main trend, we need to wait for the pullback. So we'll search for pullback trade to pinpoint undervalue and overvalue entries into established trends. So our goal is to find opportunity when price is considered overvalued or undervalued, as this presents excellent opportunity to buy low during uptrend and sell high during downtrend. The idea of the pullback trade is to buy the market at a discount during an uptrend and sell the market at a premium during a downtrend. The pullback trade is to take advantage of the situation when price is in an established trend, either bullish or bearish, and the three moving average are indicating the same direction. Any pullback in the first or second year may offer a buying or selling opportunity in the direction of an established trend. This setup is effective because it forces you to buy below value and sell above value while keeping you disciplined. We already identified the main trend, so how to enter the trade? So the first step and the most important one is to identify the current trend of the market. I know that I'm repeating myself, but I want this to be crystal clear. All three EMA must be trending in the agreement in a bullish or bearish manner. Ideally, you want to see all three EMAs trending at the 45-degree angle, which identifies a strong trend. That's the first step. The second step involves waiting for the market to pull back to test either the 8 or 13 EMA. The candle can close beyond the 8 or 13 EMA, but cannot cross over the 21 EMA. Once the price test is the moving average, we need price confirmation. The entry is triggered when price crosses the previous high of the trend. So usually I put the pending order in this case. Now you already entered the market, and here's how you manage the trade. There are many tactics that can be used for the pullback trade. Before you select the type of the exit strategy, you should first remember your scalping. The room for error is extremely small. Let me repeat that. Margin for error is very small when you trade with high leverage while looking for a small profit. Okay, for stop loss, once in a trade, I immediately set my stop loss right below the low of the pullback that I'm trading. Therefore, your stop loss would be beneath the low of the bar that tests the 8 or 13 period EMA. Just a couple bit below. So what's the psychology behind this trading technique? Well, we try to take advantage of the new traders shorting the market below 8 EMA. Think about it. We are practically waiting for the price to close below the 8 EMA. But other traders, when they see the price closing below the 8 EMA, they immediately short the market. They don't care about the general trend, see the price below 8 EMA and enter the short. That's why we wait for the price to return above the 8 EMA. We want to have trap traders below us to fill our long positions. Here's what I do when I'm scalping. I move stop to break even as soon as possible. You want to minimize your risk. You will get stop out a lot at the break even. Trust me from my experience. It's better to have 5 trades in a row with 0 profit rather than 5 losing trades. That's the ugly face of scalping. It's very unpredictable and any price swing can hit your stop loss anytime. That's why I look to play the break-even trade when I'm 5 to 6 pips in profit. I'll immediately move the stop loss to break even. You'll be frustrated when you have 5 pips in profit, move stop loss break even, and the market hit your stop loss. Continue in your initial direction. It happens all the time. But with this tactic, it will protect you in the long run. And if you have bigger risk appetite, here are some other tactics you can use to take profit. First, you can use traditional trailing profit stop or fixed profit target. The ratio could be 1:1 or 1:2, or you can exit at the next support or resistance level, or the Fibonacci extension if you trade with the Fibonacci numbers. Now let's have a look at some other pairs to give you a better idea of what we should look for on the chart. Let's go with the Euro Japan Yen, same 5-minute time frame. Let's have a look from today. Today's chart is so far not really ideal. Actually, in this period, there's a couple of chances that we can enter the market. We can actually enter here. Nice. Here we go. Yup. It's a very strong bullish trend, and it met all 2 requirements to enter the market that I mentioned before. So in here you can find the price. There is a pullback. The price cross over the 80 EMA, but not even yet touch the 13 and resume the trend. Same here, we have another pullback, touch 13 EMA and resume the trend. Same here, resume the trend. So here we have 3 chances to enter the market. Very simple. Keep it simple. And here another example of the same pair, Euro Japan Yen, 5-minute time frame. Very strong bullish trend. There's the pullback. Will not enter the market in here in this condition. It doesn't meet the 2 criteria. In here, but it's not so clear as the pullback here, so I might skip this chain in here. Alright, let's try another pair. Let's find another example from the GBP USD. Today, is there any chance? No. Yesterday. Nope. 25 March. In here you can find an opportunity to enter the market. It's not really clear in here the pullback, so there's no entrance to enter the market. And of course, there's many ways to improve the system to increase the winning rate. So please guys, have a look at this system, try on demo account, leave a comment and let us know your opinion on how to improve the winning rate. If you have any requests on any other system, any indicator, just leave a comment. I'll try my best. And that is it for this video. I hope you enjoy it and hope it is helpful, profitable for you guys. Thank you for watching, and I'll see you in the next video. Happy trading and stay green.